Hey, good morning, guys. What's going on? Hope you guys all had a good weekend. And it's time to get to work, baby. We got a regular week, short week last week, and it certainly felt like it. So let's get into it here. And you are looking at a 5-minute chart. I'm going to start on the 5-minute here today. We're going to go back and forth between the 5 and the 2. I was looking at both here this morning, and I'm going to start on the 5, though ATR is certainly a bit lower than what we were seeing here late last week. Okay, I think we're probably going to hold up as far as volatility is concerned into the near future. Today, however, it's just a little bit lower. 13 is the ATR on the 2-minute chart for comparison purposes. And on the 5-minute, we're at 23. So we can work with 23. We're a minute 8 out here on the 5-minute. Let's see what we get. Let's see what we get. Of course, something I'm watching here is obviously this bigger wedge, I'll call it, right? However, we also got to kind of keep an eye out for this. You could draw this a million different ways. Whichever way makes the most sense in your brain, man. We'll leave it like that for now. Hey, Brandon, good morning. Peter, how we doing? Javaz, good to see you, brother. All right, let's get rid of this and just clean that up as we go. And we are 15 seconds out. I'm gonna get the copy trader ready to rock. 10 seconds. Let's see if we need to put anything on here. I haven't tested the macros today. They are working. All right, let's see here. And yes, oh, I'm gonna miss it. That's okay. That's okay. We'll go next bar. Quick pop downside through. And we'll go next and see what we get. We'll pop back and forth again between the 5 and the 2. All right, let's pop over to the 2. See what we got going on. We're gonna have to consider this. This look over on the 2 is certainly becoming a possibility. Well, let's go back to the 5. I've been liking the 5 a lot lately, and I would like... The last couple of months, the market hasn't really allowed it, but I would like to spend more time on the 5 here if volatility can hold up. Which, late last week, man, looks very promising. Hey, Outlaw, how we doing? Niles, good to see you. Okay, 20 EMA here on the 5 is at 842, 843 region. That's going to sit right about here. Which, actually, we got to put that back up. I didn't save my settings last week. There you go. Now you can see what's going on. That is the 20 EMA here again on the 5-minute chart, sitting right about 843. Getting a few headlines here from the New York Fed, by the way, as we speak. Not really moving much. Probably the biggest one that they just released. They said August survey found worst probability of finding a new job since 2013. Well, June 2013. Take a look at the two here. A couple of dojis. Yeah, that's what I mean. I mean, we're getting just a lot of inside closes. Honestly, on both charts, the 2 and the 5. But the 5's a little more workable here. All right, so while everyone rolls in, we'll stay focused here on the 5-minute. We're looking at a very soft bull channel. It's really, really soft, though. The pullbacks are not shallow. But I want to keep an eye on the 20 EMA on the 5. You know, I really don't give a shit as far as what it is in and of itself. All I care about is that people watch it. Self-fulfilling prophecy. So as much as I would prefer not to, we got to keep an eye on it. Again, that's at 843. We'll keep an eye on it and see if the pullbacks remain shallow. A lot of times in the market lately, I mean, you look at the New York session daily chart, volatility's coming back. The ranges are getting wider, which is good. I mean, 2 months ago during the summer, it was a disaster. I mean, we were struggling to get ATR on the 2-minute over 10. I don't know if any of you guys were here for the legendary 4th of July stream. We were scalping a, like, what, 2.8 ATR? But it's coming back. Volatility is coming back. So even though the ranges are widening out, we still have to understand that when you look at the daily chart, at least New York session daily, we're not in a trend market. It's still a range market. So contextually, we got to keep an eye out for that. Which means when we do get pullbacks, I got to be careful about going short on pullbacks. The deeper they get. And the more soft this bull channel gets, I got to be careful getting long near the high. So let's see what we can do. Vin, good morning. How we doing, brother? Bruce, good to see you. All right. We got about 3 minutes left here on the 5-minute bar. 1 minute obviously rolling over as we speak. Nothing going on over here on the 1. Check out the 2. Oh, brutal dojis here on the 2 as well. That's all right. We'll hang out on the 5 for now. How are you guys doing today, by the way? You know, I know that when we get these soft channels that look like trends early in the day, and then everyone forgets, hey, we're in a range market, and it turns into a soft trend, or more so, you know, soft channel. I guess you could call it a really, really soft bull trend. But to avoid confusion, I'll call it a soft bull channel. I know a lot of people tend to get, as they like to say, chopped up, which really just means you fucking lost, which is okay. Let's not beat around the bush. 2 minutes out, by the way, here on this 5-minute bar. But it's tough. I mean, listen, when you get this bar here, it's kind of hard because you haven't seen anything yet. And in a lot of cases, 3 consecutive bull bodies, the only case against it is that they're shrinking. And we're getting wide ranges inside the bars with big wicks. Okay? But that close right there, if you got long above that close, I would not be mad at you. That's not a bad trade. It's just, you know, it's kind of early in the day. You get stopped out, you move on with your life. And then it turns into a soft bull channel. And I know a lot of people get hurt in price action like this. Tom, break even today, tough morning. Yeah, Javaz green, baby, good work. Vin says, I'm long with 10 contracts. Should I hold? Come on, Vin. Come on, man. You want to trade for real? What are you going to go on Reddit and ask everyone's opinion every time you're in a position? What does Vin think he should do? What does Vin, more importantly, what does Vin's plan say he should do? Don't worry about what I think. Because reality is, I don't have any bias. I don't give a shit. I'm just going to trade what the price action says. All right, 12 seconds out here. Looks like we're going to get another inside close, huh? Yes, we will. All right, we'll go next bar here. Let's check out the 2, see what's going on over there. Very soft over here on the 2. All right, this bar is getting interesting. There's a lot of time left on this 5-minute bar, but I would not want to see it grow too much because something I'm looking at, you know, the 1 minute is kind of like, I don't know, I mean, you gotta take any pattern on the 1 with a grain of salt if you're looking at it from let me put it this way. If you're trading on a higher time frame, if you see a pattern on the 1, you should take it with a big grain of salt. If you're trading on the 1 and you see a very clear pattern on a higher time frame, you take it with a little bit less of a grain of salt. Because patterns develop obviously more frequently on the 1. But I'm keeping an eye on that. We've been seeing a lot of that lately. Like these little soft bull channels. Here. These soft bull channels turn into like flats, turn into very even softer bear channels. We've been seeing that a lot. And that's not, there's nothing special about that. It's just because we're in a range market, which can make things tough. I mean, listen, if you've struggled this summer, I don't necessarily think you should be so hard on yourself. I think a lot of people have struggled this summer, and that's okay. Is there anything you miss about options trading compared to futures? Who said I'm not doing it? I started options years ago and find transition to futures difficult without managing RR. I've never, I think this is, people don't understand this. I have never really traded options, at least consistently, the way that everyone thinks that everyone trades options. When people say, oh, I'm an options trader, most people who say that are just buying 0 to 3 DTE calls and puts because they have a hunch. No, I have used options as intraday scalping vehicles, which is fine. It works relatively well if you're scalping them. Now, there's problems involved because there's a lot more math involved because you have to always understand the Greeks for every scalp that you're running, which is a pain in the ass, I'm not going to lie. You're running calculations all day on the Greeks if you're using options for intraday scalping. Now, as far as actual options trading, like what has been the most consistent thing in my trading forever is net sell. I do not mean net short. I mean net sell option strategies. I've said it a million times. That's the first thing ever that let me cover everything I needed income-wise from trading alone. That was the thing. So no, I don't. It's different. I use futures for intraday activity, active trading. Options is managed in under 15 minutes a day. There's built-in edge mathematically in net sell option strategies. Depending on how you manage them, you have to do it in the right environments. But in high IV markets, for example, there's a lot of money to be made over there. When IV gets crushed across the board, you make a little less money in the options portfolio, which is okay. It's just part of the game. But I think a lot of people that try to trade options, they don't understand, like, there's this whole other world. So if I say, you know, I'm going to do some option stuff, everyone thinks, oh, you know, which contract are you buying for tomorrow? Not even close. The people who trade that way, by the way, are the people who willingly give you, as a seller, your edge. Because they want the leverage that you're providing them. That's the built-in edge. All right, here, 4.5 minutes out. Let's head over to the 2. Yeah, I don't know, Brent. I might have an old video somewhere on running the wheel. It's very simple. Running the wheel is very simple. It's not complicated. Take a weekend, learn the Greeks. If you understand the Greeks, you can run all the math you'll ever need. Now, do I think you should just, like, run the wheel forever? No, it's a little more complicated than that. There is a discretionary side. I think just straight up running the wheel all the time is not necessarily optimized. But you can do essentially that with, you know, a little more brain power involved. But it's not complicated. It's really not. Just learn the Greeks. Once you understand the Greeks, you understand how they move. And once you understand how they move, then something like the wheel just becomes second nature even without studying it. You just kind of understand why someone would do that. You feel that way? Fine. Hola RA. That's fine. Options are complicated. They're not bullshit. They're complicated at first, and then once you understand the Greeks, they're pretty easy to understand. But they're far more complicated than a futures contract. That's why futures are so optimized for trading intraday. There's no Greeks. It's, do you want to buy or sell? Futures are very, very simple, actually. Far more simple than options. So it makes me chuckle when people say, oh, options are bullshit. It's like, how much did you lose buying short-dated calls and puts? Using options for their intended purpose and taking the side with the built-in edge rather than taking a very, very, very low or I guess negative expected value on the trade in exchange for high leverage, which is what buying short-dated options literally is, that's the opposite side than what I consistently am taking. So when people say, oh, options are bullshit, man. Okay, how much did you lose? Not understanding what they actually are. Brandon, what's the difference? By the way, we have a minute 30 on. I'm keeping a close eye on this. What's the difference between net sell options and running the wheel? There isn't really. Net sell options are the bigger umbrella term. Running the wheel is just a strategy that falls under that umbrella. But you can run different spreads, different amounts of legs in the spreads, different management styles. Running the wheel is just a very simple like strategy. Like you do this until this happens, then you do this until this happens, then you go back to the beginning and do this. So net sell is the umbrella term. The wheel is just a name given to a strategy that falls under that umbrella term. 55 seconds out. We are testing, by the way. We're looking at the 2-minute right now. Let's go back to the 5. We are testing that 20 EMA on the 5. And since we have not really given up this soft bull channel, I'm looking at something here. "25 seconds out. Let's see what we get as far as a close out of this bar here. You might be thinking, are you going short? 10 seconds out, you'll find out. Decent close out of the bears. Punch it long. Manage risk there and see if we can get a suck back up into that range. I am not just trading off the 20 EMA here on the 5-minute, but it certainly doesn't hurt. And we'll see if this can continue as a range. Even if it turns into a soft bear channel, that's okay. I mean, still, you're sitting pretty much at the bottom of it. And not to mention, so pretty much any look you look at, you're sitting reasonably at the bottom of it. So I will take that. And if we're wrong, we're just wrong, and I'm cool with that. But sitting long here, let's see if the bulls can take it back up into the channel. ATR here on the 5-minute chart is 20.4. So let's see what we get. Now again here, ATR on the 5-minute is about 20.5, so we'll keep an eye on that, keeping that in mind. Come on now, bulls. Fade it back up into the range. All right. Certainly going to need a harder push than this. It's all right. Volatility is a little bit down. Can't expect the world in 2 seconds. See if they can Get some work done here, the Bulls. There we go. HR still sitting right in the 20s. Got a minute 35 left here on this 5-minute bar. There we go, Bulls. Harder push. Now, kind of at a minimum here, I'd like to get 3/4 of an ATR, like minimum. And we'll still manage this bar by bar. But, ideally I'd get a full ATR. However, as this develops, we'll see if the channel allows for that. ATR now dipping beneath 20. We're at 19.5 on the ATR. There we go, Bulls. All right, HR sitting at 20. Let's see here. That's 3/4 of an ATR. You guys see, we flatten the copier. There we go. And you guys see this. Keeping an eye on this. Let's see how that develops. And we'll look to see if we can take the next trade, but we'll book that at 3/4 of an ATR and move on here. No, we're running multiple accounts here. Always multiple. Well, I shouldn't say always. But right now, we're running multiple. And pretty much all the time, we're running multiple. All right, 25 seconds out. And these bulls are pretty much just reclaiming that big bear body here on the 5. So let's keep an eye out here. All right, let's check out the 2-minute here. See what we got going on. Honestly, it's kind of exactly what you'd expect. Looking at the 5, this is pretty much what you expect the 2-minute to look like. Let's see if the bulls can push it through there. We're seeing kind of that same look on the 5. I mean, look here. Sometimes these charts just almost look exactly the same. Sometimes they look pretty damn different, obviously. But there's the current look. That's a strong bull body, though, closing outside of this big bear body, but still inside of what may end up being a little soft, very, very soft, almost sideways bear channel. But we will see if that becomes a thing. All right, guys, one nice trade in the books. Be back in a couple minutes. Don't go anywhere. Welcome back. All right, we're a minute 40 out, and we are coming in for a test of that 20 EMA here on the 5. This wedge that we drew has maintained itself beautifully, so let's see if we can do something around this wedge. However, this region here, you see that? Has not really been proven yet, so there is a great possibility that this is actually the look. You do have the 20 EMA right about there. Right at 55-ish, 56. So let's watch both those, see which one plays out. This is that time of day. I mean, right? Previously we had that. Now we end up with this look, and right here is a big question where a lot of people get burned because they only see one of the looks. But you have this soft bull channel that maybe is turning into a tighter soft bear channel, or we're gonna break out this high right here, this lower high here that got put in, and then look to stop on the high of day and continue the soft bull channel. So this part of day is very confusing, honestly, for a lot of people, which means I need more information. New 5-minute bar here. ATR here on the 5, 17.7. Which is relatively low here on the 5-minute chart. We should actually, let's check what it is on the 2, huh? Under 10. ATR on the 2 is under 10. That's all right, man. We can work with 18 on the 5. Okay, Bear's taking it down for a test down through this look here, which is also the 20 EMA here on the 5-minute chart, which is that gold line. What's up with you guys? You guys are quiet today. Did everyone blow their accounts? What the hell, man? Did everyone blow every PA that they had in this trading the opening range? Nah, actually, I think today if you traded the opening range, depends on your take profit. I'm actually curious. I know a lot of you guys do take that opening range breakout, even in range markets. Are you looking for, how do you base your price target? Are you basing it on ATR? Some kind of volatility indication? Oh, Cindy, sorry to hear that. All right. Big push here out of the Bears. Let's get rid of this guy and see now if this original wedge that we drew ends up being the look. Yeah, listen, you know, Pat and the rest of you, if you find yourself gun shy, because it's been a tough couple of weeks, or a tough week, or a tough couple of days, or a couple of months, by far the best advice I could give is A, look at all the price action, take an evening, take an afternoon, take a weekend day, not even a day, like an hour. Look at the price action over the last couple of weeks. Say, have I been missing something? Have I been trading this as a range market, but it's clearly a trend market? Have I been trading this as a trend market, but it's clearly a range market? And number 2, size down. Size down. If you're gun shy, you're scared. The way to fix fear is to trade smaller. And if you have no confidence, you're going to trade like shit. You are. If your confidence sucks, your decision making is going to suck, whether you realize it or not. So size down, man, until you're no longer gun shy and you have the confidence back. Not like overly cocky, like I can't lose, like some people tend to get early on and then they get humbled. Just until you want to be a little bit cocky. You want to look at things and say, I see what other people don't. And that helps me find an edge, which helps me make money, which helps me do this for a living, which is obviously, you know, that's a blessing in and of itself if you can get to that point. So you should be a little bit cocky, but understand that losing is part of winning, man. If you can win 1-to-1 reward to risk 55% of the time, which is like not that good in all other areas of life, you are murdering it in the market. You're killing it. If you are winning 1-to-1, just make the numbers easy, 55% of the time. 60? Oh, it's over. It's over. So if you can maintain that win rate, you should have confidence. But if you find yourself gun shy, size down until you get it back. And it will come back. You will find yourself feeling good again, coming into the chart, expecting to just play out your edge, and you expect to win. And if you lose, you're like, all right, part of the game. Put it in the L column. Knowing that once you get to the bottom of that column, the end of the month or the end of the quarter, whatever, it's going to look good. All right, 6 seconds out here. Let's get a new 5-minute bar. This is going to be an inside close beneath that previous little curl, just barely. I'm sorry, inside of that previous little curl. Which curl are we talking about? Here. Right there. See that? Just barely inside. So let's watch this next bar here. Mezzo! I'm new to trading. What's the best piece of knowledge you can give? A few things. If you're trading futures, and if you're trading price action, do what makes sense to you. Make logical decisions. Track your data. And understand that what you're really after is not to make money on this trade. What you're after is a long-term statistical advantage, which is going to come from a mix of having setups that make logical sense. For example, you get 3 or 4 bull bodies growing, closing near their high. Use a stop limit buy. Try to get long above the 3rd or 4th bull body. They're growing, closing near their high. The market is clearly, quote unquote, clearly going higher. What does clearly mean? 55 to 65% of the time, that trade is going to work if you structure something that makes sense. So then what you do is you make logical decisions for a while. You track your data. Well, even just pen and paper. I don't care. You don't need software. You don't need to buy anything. Write it down. Pen and paper. Go to Office Max. There's your data tracking right there. Write it down. Look back and say, all right, it's been 2 weeks. You know, if you're scalping, you've probably at that point taken, I don't know, man, at least 50 trades, probably. Then look at it and say, okay, do I have positive or negative expected value? If it's negative, you got to clean things up. Maybe manage risk better if you made mistakes, like moving stop losses or deleting stop losses, which everybody seems to do. You know, early on, I did the same thing. It's very, it's a human condition. I mean, we're all wired relatively similarly, especially those of us who want to be traders. We're not that different, at least our lizard brain is not that different. And if you know what, you get done with 2 to 4 weeks and you have 50 to 100 trades and you're like, holy shit, I was net profitable. Then you look through and say, was there anything that I could have cleaned up? No, I didn't really make any mistakes. Yeah, of course, there were losers, but that's part of winning. Boom. You have a statistical edge, at least in the current market environment. Now, half the battle is maintaining that edge through different market environments, but the more markets you trade in, the more you'll have to clean that up, and it's all repeating. So trend markets will repeat, range markets will repeat, sideways little markets will repeat, big bull markets, big bear markets. And once you've kind of been through all of it, you've seen most things at that point. And you're good to keep showing up. Like everything I said sounds super complicated. It's not. It's not. Write down your setups. Categorize by setups. Don't make any mistakes because you're just fucking up your data and extending the process. Get 50 to 100 trades worth of sample size and then look. Did it work? Did this setup have a reasonable expected value? No, it didn't. Okay, the sample size is good enough. I took 110 trades. Expected value is negative. Put it on the back burner. Revisit it when the range market turns into a trend market. If it makes logical sense to do so, assuming it's not like a reversion setup. What I just said, let's be straight up, 97% of you are going to listen. It's going to go in one, out the other, and you're going to keep doing what you're doing. And if you're losing, it's not working, you're going to continue to get that result. The other 3% of you are going to listen to that and say, yeah, that makes a lot of sense to me. The whole reason you get paid in trading is having some kind of small, really small mathematical advantage and then just extending the sample size. And you're going to go get a notebook and a pencil or a pen, and you're going to start tracking your shit, or you're going to use software to do it. And in 6 months, maybe you're doing this full time. Most of you are not going to do that. And that's okay. That's why the statistics in day trading are such garbage. Because most people don't do that because it sounds confusing, it sounds hard, and it's work. And people get into trading to lay on the beach all day, which I think is ridiculous because the best traders are not doing that. They're working extremely fucking hard. Very hard. New 5-minute bar here. Nothing to do on that bar. Let's see if we get on this next one here. We'll keep an eye on the 2-minute as well. Yeah, 2-minute looking very similar. Kind of what you'd expect. Let's pop back to the 5. Started trading futures at the beginning of April. Does fall and winter tend to have more volatility and more trends, or does it just depend on the year? It depends on the year, but I'd say like 6 or 7 times out of 10. Yeah. Fall and winter and you know, early spring is a little more volatile typically than summer. Like 6 or 7 times out of 10, I would say. People say, oh, summer trading is always, oh my God, it's always so dead. No, it's dead maybe 60 to 70% of the time. You know, a lot of people they'll actually trade like the Santa rally as their trade idea. Because some guy trying to pump his own book went on CNBC. I mean, why else would you go on CNBC if it's not to pump your own book? And said, the Santa rally's coming. Everyone goes, I'm gonna get long because it's December 3rd. It's like, what the fuck? Like, what a basic concept that is kind of ridiculous. If it's a supporting factor, maybe 1% of your trade idea, then fine, man, toss it in. But just say, I'm buying because Santa rally's on the way. That's garbage. That is very much oversimplifying a complicated market. But the math in the market is not that complicated. It's just not that simple where, you know, people are in a good mood because Christmas is coming up. Everyone's going to be buying. I don't know, man. Maybe 50% of the time, but that's like everything else. Yeah, Jose, we're hopping back and forth because volatility has been coming back the last week or two. Really the last week. Volatility today is down a little bit, though. So we're watching the 5 because the 5 and the 2 look pretty similar today. And the 5 is a little cleaner. All right, we're a minute 45 out here. I gotta tell you, I am very interested in taking a stab to the short side, because I can just use the high a day to manage your risk. And just bet on this little soft, very, very soft bear channel. And if the bulls are able to take it up, take out the high a day. Again, it all depends how this bar closes up. But if they're able to do that, then I can just be among the people getting stop hunted. It's just when I try to stop hunt this high a day with this look, no, it's too soft. It's too soft. So I can instead take a bet on the range and use the high a day to be among the stops that other people may try to hunt, but that's okay because I would not be in that group right now. Let's see how this closes though. If it closes a little too high, like above this wick, then I'm not interested. 55 seconds out. All right. $30 here. Now again, if this bull body closes inside of this wick here is kind of where I'm setting my cutoff. Obviously, you know, within reason, unless it turns around, then I wouldn't take the trade. But if we close about here, I'm gonna look to punch this short, use the high of day. This here is the high of day to manage risk and bet on the range rather than looking to hunt stops, because this is not a setup I would hunt stops on regardless. So let's see how the bulls close this up. We're on the 5-minute chart. I will punch that to the short side, suck this in. And we will use high of day to manage risk. ATR here on the 5-minute chart is 19. There's a decent push out of the bears. Kind of right off the bat. What do you say, huh? Not too bad, bears. Keep an eye on that 20 EMA here on the 5 at 857. We could get about 3/4 of an ATR. I'd be happy with that. All right, there you go, bears. A little deeper. There you go, bears. Come on, take that deeper. They're kind of fighting with coming into that 20 EMA here on the 5. They're fighting with that a little early. There we go. Oh, there we go. We'll get 3/4 approximately of an ATR. All right, good scalp. Let's move on. All right. Nice couple of trades here thus far. Gotta update that trade counter. 2 wins so far here today. Learned the ATR from you, started implementing it in gold. Yeah, ATR is relevant everywhere. Everywhere, unless you expect massive volatility changes inside of like a 1 minute bar. I still think it's relevant, but it becomes probably the... Let me put it this way. It's a little sloppier on like a small cap momentum stock where volume comes in so fast that the ATR is lagging even like a minute behind. But I mean, listen, on every single commodity, on every, you know, on NQ, ES, whatever it might be, just blue chip stocks, the average true range is it's just one of the realest things we can look at, which is why I like to look at it, because it's genuinely just telling you, hey, what's the volatility of each bar on average based on the last however many bars you want to look at. For me, I look at the last 10. So on a 5-minute chart, we're looking at the last 50 minutes. I don't know. It can be whatever the hell you want. 10 is a clean number. It's not magic. I've become a much more patient and detached, that's a good word, trader, since I started following you. Thank you. I mean, yeah, listen, guys, I think I'm very attached to the outcome. The goal here is to make as much money as humanly fucking possible. Life is extremely expensive. And I take that personally, that we're expected to just make an unlivable wage and be okay with that. No. No. No, I said no from a very young age when I dropped out of school. And I said, that is terrifying. That's terrifying. Having it all laid out and having no control. I said I would rather sleep under a bridge but know that I'm betting on myself and I'm in control, genuinely, than the alternative. So I dropped out. But I'm very attached to the outcome. It's just day to day, I don't care because I know how data works. When a casino on some random Wednesday in April has a small red day, do you think they change everything and go, oh my God, there's no more edge in blackjack. Oh no, the math on roulette broke. You understand what I'm saying? Do you know how ridiculous that sounds? They say, okay, fuck it. Run more marketing, get more people here. Get the sample size higher and we make it back. Because they're logical. Most traders do not think that way, and that's why they lose. Long term, at least. Jeff, welcome to the channel, brother. How we doing? All right, minute 55 out here on this 5-minute bar. Let's see what we get as far as a close. Let's check in on the 2. Absolutely nothing going on the 2. So we'll head back to the 5. And see what we get here. We can get trade number 3 on the day. Yeah, I mean, could you imagine? Sounds ridiculous, right? Well, that's exactly what traders do when they know that they have a statistical edge, and within reason, they think that they saw things within reason today, and they had a red day, and then they go and flip out. And change everything. That's what you're doing when you do that. All right, 25 seconds. Yeah, we're kind of barely scratching the surface of the lower third of this wedge. If I had to do anything, I'd have to be getting long using this as my risk management, but this is not closing low enough. Yeah, I can't make sense of that. Especially with the 20, yeah, especially with the 20 EMA right there. I cannot make sense of that. So we'll wait and go next bar here. Check in on the 2 minute. Yeah, pretty much just a zoomed in version of the 5. So we'll head back to the 5 and see what we can get. Why move from the 2 to the 5? You mean why back and forth, or why in general? I go back and forth between the 2 and the 5. I love the 5 minute chart. If we have good volatility, I'd probably prefer to trade on the 5 minute chart. The problem is we've been on the 2 for months because the volatility sucked and the 5 was pretty wicky. So it wasn't really allowing us to do much. So we were scalping on the 2. Now, why the 2 minute at all? When you're trading for hours a day, it doesn't matter, first of all, but when you're trading for hours a day, the 1 minute gets to be really fast to make decisions, because you guys know for a lot of times I'm making my decisions on the bar rollover, meaning the close of one bar, the open of a new bar. The 1 minute seems reasonable, like you could sit here and scalp it for a long time, but once you get to hour 2 or 3 or 4, it starts to get to the point where it's like making a decision every 60 seconds gets to be kind of a lot, and your decision making goes out the window. This has nothing to do with how intelligent, how quick-witted you are. It's just fatigue. I mean, that's the reality of this. So for me, the 2 minute is a great balance between quality of setup and quantity of setups, because as you go higher in time frame, the quantity of setups goes down. The quality does tend to go up. So the 1 minute, the quality drops a bit, but the quantity goes way up. The 15-second chart, the quality goes way down, not necessarily to negative if you're really good at a 15-second chart, which is really, really hard, by the way. But the quantity goes way, way up. So if you can trade a 15-second chart like a wizard, get orders out, put your stop limit buys and sells where they need to be, make decisions, and not have your decision making go downhill, which almost nobody can. Pretty much no one can. That's not a challenge, by the way. I'm telling you, it's harder and probably not worth it. Like, trading's hard enough as it is. But if you can do that on a 15-second chart, the quantity of setups you get that give you edge, because you have edge on average, right, goes way the hell up, and you can make a ton of money. But it's almost far more difficult, and the upside isn't really that crazy to justify going that nuts, because almost everybody, your decision making starts to slip. You make mistakes because that's really, really fast to be getting orders out all the time and making decisions when you need to and seeing everything on the chart. So for me, the 5 minute is a fantastic balance. When the 5 minute looks sloppy or isn't really giving us setups, I use the 2 minute, which is also a fantastic balance of quality of setup and quantity of setups, to beef up the sample size, because sample size is king in scalping. Just like the casino wants a bigger sample size, they want more people to come through the door and spend more money at the tables to make sure the math works in their favor and play more hands, play more spins, right? I'm not talking about the player side, I'm talking about the casino side. As scalpers, we need more trades with a reasonable positive expected value on average to get the numbers to work out in our favor. So when the 5 isn't providing a decent sample size, I use the 2 because I like the 2. But if you like the 1, if you like the 3, it doesn't matter. All right, we're 45 seconds out, and this 5-minute bar is sitting as basically a doji. So let's see if this changes up in any way. It gives us something we can do here. Again, when you're drawing these levels, man, don't overthink it. Just draw it how you think most people would draw it. Now, we could also make this argument, is the thing. Right? You could 100% make that argument. But I'm going to stick with this for now and just see what we get. There's not a setup here for me anyway to get long, so I'll leave that flat out just in case we end up seeing that become a thing with a little more emphasis on this. SK, why no VWAP? I like VWAP. I've used it for a very long time. But I don't like messy charts. I dislike messy charts more than I like volume weighted average price. I throw up a 20 EMA. Could you swap out the 20 EMA for volume weighted average price? Sure. Sure. It doesn't matter enough for me to really care that much. I'm trading price action. Just pick something that's really, really heavily watched, a really popular indicator. Maybe I swap out the 20 for volume weighted average price. Sure. Is it going to impact my performance that much? I don't know. I don't think so. If you like VWAP, man, use it. Use it. As long as it's popular, throw it up. Don't take trades based off of it. Just use it as a supporting factor. Now, if you're using a 27 EMA on a 3-minute chart, you're wasting your time. No one's watching that. No one cares. All right, let's get rid of this. This market clearly looks like it wants to test this guy here. Two and a half minutes out. We're halfway through this 5-minute bar, and we are testing that little descending support-ish level. I'm not big on, there's no other way to say it other than, descending support, ascending support, descending, ascending resistance. I think a lot of people, when they say that, it implies to people who are a little newer to the space that it's indestructible, which it's not, and it implies that it's a line, which it's not. It's a range of interest, and it's a self-fulfilling prophecy that algorithms and humans are looking at, which can create a little buying pressure down there. It doesn't mean it's going to outweigh the selling pressure. It's just when you have buyers and sellers, sometimes when you dip down into that region, the self-fulfilling prophecy does this on the buyer side. Now, what do the sellers do? Who knows, right? It just, that one factor might increase the buying pressure. So we'll call it a descending support with the understanding that I'm not a big fan of that verbiage just because it implies something it isn't really. Is the EMA used for resistance and support? I mean, it can be a supporting factor, like I said. Otherwise, no. No, I do not take trades off of EMAs. Now, why? I tested this extensively years ago. I tried to make it work on ETFs, on blue chips, on mid caps. Small caps is a little different because like people are actually watching like a 9 EMA, a 10 EMA. And it is a little different. It's a strong enough self-fulfilling prophecy maybe on small caps that it actually comes into play, and you see it come into play. But on futures, on ETFs, on blue chip, mega cap stocks, I tried to trade strictly off of EMAs, and I ran a whole bunch of data, and I ran a whole bunch of different EMAs, and I could not make that alone work. I couldn't make it work, at least not long-term enough, even mid-term. So I said, okay, I tried it. The data doesn't support this, and I moved on. And I said, supporting factor at best. Write it in the notebook, move on. All right, bears trying to put in their 5th consecutive bear body here on the 5-minute. It's a relatively new bar. Over 4 minutes out here from the rollover of this 5-minute bar. Now again, what does the 20 EMA do? Well, in this case, you see how it's right in the middle of this wedge? Which the wedge is becoming kind of a clear self-fulfilling prophecy. It's kind of right in the middle, right? So if we had a bull body close right above this bar's open or wick high, in some cases, I would get long to look for a push of the backfill of the whole wedge, but we're right in the face of the 20 EMA, which I use as a supporting factor at best, which can slow things down a little too much to turn the expected value from a little bit positive to break even at best. So I oftentimes use something that's heavily watched, whether it is volume weighted average price or more likely a 20 EMA on a 5-minute, just something that gets watched a lot by a lot of people and algorithms to stop me from doing something rather than I'm gonna do something because of it. So 2 minutes, 50 seconds out. This bar is sitting as a doji right now. Let's see if we get an adjustment here that leads us to be able to do something. 2 trades so far on the day. All right. Okay, so we're 42 seconds out. Now, this is one of those scenarios that gets a little interesting because this soft bear channel, this here is the strongest consecutive bear body move that we've seen in the entire soft bear channel. It's 5 consecutive bear bodies if we close as a bear body here. So, that being the case, if I were to get long, I would much prefer to do so using a stop limit buy above a small bull bars high rather than in the face of a 5 consecutive 5-minute bear bar move, even though it's at the bottom of the wedge. So that's what I'm thinking about right now. So we ended up closing there as an inside small-ish bear body. So let's keep an eye on this next bar. We'll hop back and forth between the 5 and the 2 over the next few minutes. Yeah, that 2-minute chart is wiki. Wiki, wiki, wiki. So we'll head back to the 5. Hey, Matthew, what's up, brother? Time remaining is the time left on the bar that we're currently on. So you can see, there's a 5-minute chart. We pop back and forth between the 5 and the 2. And on this 5-minute bar, there's 4 minutes and 23 seconds left. I am making most of my decisions. Not all, but most of them on bar rollovers. Man, if you guys haven't yet, hit the like button on the stream, man. It helps out tremendously. Tremendously. And it costs nothing. Appreciate you doing so. 3 minutes out here. Bears trying to lock up number 6 consecutive bear body here on the 5. Let's see if they can. Now, again, something else to consider here. We're looking at pretty much the whole day. This back here was market open. This is pretty much the 50% retracement point on the entire move of the day as well, which is something to consider because those average in shorts are able to get out break even on average. All right, minute 12 left here on this 5-minute bar. Now again, let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56, 57, 58, 59, 60, 61, 62, 63, 64, 65, 66, 67, 68, 69, 70, 71, 72, 73, 74, 75, 76, 77, 78, 79, 80, 81, 82, 83, 84, 85, 86, 87, 88, 89, 90, 91, 92, 93, 94, 95, 96, 97, 98, 99, 100, 101, 102, 103, 104, 105, 106, 107, 108, 109, 110, 111, 112, 113, 114, 115, 116, 117, 118, 119, 120, Let's see if we get a decent bull body. That might get me a little bit interested here. ATR on the 5-minute 18. 24 seconds out. Now let's see if we get a half decent bull body. Close here in the next 15 seconds. Copy trader is ready to go. That will be the first bull body close in the last 6 bars. And if we get that, I'll have to place a stop limit buy right ahead of it. Ooh, kind of a wick. Gonna have to cancel that. No trade there. Very small bull body with a wick that's just about the size of the bull body. So we'll cancel that order. We'll go next bar here. Gotta be picky sometimes, man. All right, let's check in with you guys again. How are we doing? How are we doing? Last time I checked in, seemed like everyone was not doing so hot. Some blown accounts. I mean, listen, it's okay. It's all right. Give yourself some grace. This is very hard. Trading is very difficult. There's one thing I've learned, man. Obviously, we've learned a lot. You learn a lot about yourself. You learn a lot about, you know, your process, your strategy, risk management. You learn a lot about yourself mentally, emotionally, psychologically. But if there's one thing I've learned that I would like you guys to take away I should say, please, it is not worth it. Do not derive your self-worth from your P&L for the day or in totality. It is not worth it at all. Okay, I think most of us have done that. I have certainly been there. And all I do is look back on those days that I was red, where I was in a bad mood the rest of the day, and say, that was fucking stupid. What a waste of a day. That was really stupid. And I'll be damned if I let that happen to me today. Fuck no. Something as stupid as a red day, something as replaceable as money, especially when you have a statistical edge, where you know if you just come back and do your job, it's going to come back. Assuming you have an edge, by the way. If you don't have an edge, you cannot have that mentality. It's called digging the hole deeper. But it's not worth it. All right, 2 minutes out. We've got a growing bear body here. That's a nice growing bear body here. See this wick? Took out a couple of stops. Only gave you a few points. Minute 40 out. Let's see what we get. All right, 25 seconds out. This is one of those scenarios you get shrinking bear bodies, at least from here to here. Turns into a bull body, but really kind of like a bull doji. And then you get a big fall through bear body. That closes probably inside of this wick back here. Which means I need more information. As much as I'd like to do something here, I can't. There's nothing to do. By the way, guys, best deal right now. The best deal right now is going to be Take Profit Trader. 40% off, no activation fee with code BIG. It'll be coming across the screen here in a second. Right there, that's going to be the best deal. So, listen, I've said this a lot, but if you're somebody who's trying to bootstrap going full time, I think Take Profit is going to be the way to go. Daily payouts. Life is expensive and you need money coming in as consistently as possible. And it doesn't help when the prop you're trading with kind of stands in the way of that. Now, again, every prop has benefits, right? Apex, tremendous for trying to go big. 20 accounts. The payouts, they come, man. They just take a little bit longer, but that's okay. And you got to trade to 8 days. Take Profit Trader, you can get payouts on day 1 in a pro account if you get over the buffer. And then the money's in your account very quickly. So again, if you're trying to bootstrap going full time, I think starting with Take Profit Trader is a tremendous way to go. And code BIG will give you 40% off. And you don't have to pay an activation fee, which is over $100, so that's very nice. All right, 2 minutes, 45 seconds out here. We may get a consecutive bear body, and it may be relatively sizable. I don't want it to be too big. Ooh, it starts getting too big. It starts getting tough to manage risk. Javaz, well, you can have 5 Take Profit Trader Pro accounts at once. So if you're trying to max out your pro accounts, you can go 5. But that doesn't necessarily mean you can only buy 5. You know what I mean? Like, you could have more test accounts going if you assume you're going to fail some. But all right, minute 20 till we get a close here of this bear body. See if it stays a bear body. Bull's trying to wick this baby back higher. Let's see. Why do prop accounts have 1-month renewals? It's just on the tests at Take Profit Trader, the evals at Apex. However, you know, if you're taking your time trying to develop an edge, you might run into that renewal. I think for most people, especially at Apex, where you can pass in 1 day, you can pass in as little. There's no time restraint. You can pass as quickly as you want at at Apex. At Take Profit, you do have to trade for a total of 5 days minimum. Take Profit Trader to pass the test, but assuming your goal is to get funded as soon as you can, not to say you should trade irresponsibly, but usually you're not going to run into that monthly renewal. At least you shouldn't optimize for consistently running into it. Now, again, if you're buying it to act as a way to find your edge, then you take that monthly renewal as an expense for helping you find your edge because you're trading like maybe 1 micro and going very slow. But long term, I, of course, try to optimize for passing as quickly as possible, so I'm not really, going to run into that all that often. Unless it's sitting on the back burner, I'm not working on that eval. And then it happens to go a month without me working on it really, and then it gets charged again, which, whatever, part of the expenses. But you shouldn't be running into that all the time, assuming you're optimizing for just getting funded. Moto, how do you determine when you should stop trading? Well, the real answer to this question is you have to be honest with yourself and assess. You should stop trading immediately when you come to the conclusion that you don't think you have a statistical edge anymore. Now, why would that be the case? Maybe you're not seeing things right. Maybe you keep seeing things as a trend market, but the market's clearly trying to tell you it's not a trend market, it's a range, or vice versa. That's when you should stop. Or if your emotions are running so hot, like on a scale of 1 to 10, I'd say above like a 3, that your decision making goes downhill. You should also stop then. Now, the problem with all of this is that you have to be able to make that call to yourself honestly in probably a heightened emotional state, which is a big problem for humans in everything in life, which is why it's hard to make that call. But that's the real answer. So I'm not going to say something because I don't think you're capable of doing so. I'm just going to tell you what it really fucking is, and you're going to have to figure it out. How to make that call in a heightened emotional state. Two minutes, 20 seconds out here from the close of this 5-minute bar. Let's clean this up so we can get a fresh set of eyes and take a look here. All right, ATR here, 2021. So I don't want to see this bull body grow much more at all. But if we could stay put right there, that makes sense as a trade for me, even in light of having that 20 EMA up there at about 41.50. Then I would just risk the signal bar. You could risk the full curl. I think with this here, it doesn't make sense. I would just risk the signal bar, keep it a little tighter. Let's keep an eye on this here. 30 seconds out. Again, you're looking at a 5-minute chart. If we can see this bull body close above this wick high, but within reason, probably below about 23. So in this little window here, then I will look to get long, risk the signal bar for a push back up into this range. Copy trader is engaged. Got to be picky about this close. Let's see. Inside close, no trade. No trade. We'll go next bar. Javaz says, Nico, I find your trading style to be an excellent strategy for beginner traders. Offers more control on the losing side while allowing profits to grow more effectively. Yeah, I think once you kind of wrap your head around price action in general, it gets a lot more second nature. I'm thinking throughout the whole bar, but I mean, the price action, the more charts you look at and the more you trade price action, a particular style within price action, whatever that is for you, I think it just gets more and more subconscious. It's not all that difficult. It just requires you to look at everything and think. But you know what you're looking at. That's the problem early on, is when you're looking at charts, it's like, I mean, I think I know what I'm looking at. I saw a YouTube short where someone said this is a good setup and it looks kind of like that, but you don't know what the hell you're looking at. The longer you do this, the more charts you look at, it's like, yeah, this is a range. Okay, we broke the 50% retracement point on this overarching move, which I have to zoom out a little to show you. The whole move on the day, we pulled back through the 50% retracement point. A lot of inside closes, not a lot of, definitive nature to this move, but we are in kind of a soft soft bear channel. It got relatively tight through here. Volatility's increasing. So at this point, it's like, well, I need something a little bit more definitive. A big bear body, which would be outsized, makes it hard to manage risk near the low end of a channel that's already tight. So to expect to just fall off a cliff and go through, maybe that's kind of a weird expectation to have. It starts getting very simple to look at, I think. Now, does that mean you're going to win every trade? No. Does it mean it makes it so easy to look at it and just pick all winners? No. It makes it easy to look at and execute your plan and just do your job, which allows you to trade longer without fatigue, right? Which is also important to get the sample size up. 2 minutes out here on this 5-minute bar. Let's see what we get. All right, 55 seconds out. Let's see how this 5-minute bar closes up. By the way, this here, where my cursor is, you see there, 771.50. That's the low of day since the open. So I would like to see if we can maybe look to stop hunt that, but again, like I just explained, this is not the bar to do that on. I would need at least one more bear body here, closing quite a bit closer to that low, to have a reasonable expectation of it just deciding to go. Take out those stops, put me a little bit deeper in the money, pull it off, and then we'll reassess. Nico, do you think your 5-minute trades have a higher winning percentage than your 2-minute trades? It depends on the market, but honestly, I think the 2-minute trades, lately I would say no. On average, I would say the 2-minute likely does have a higher winning percentage than the 5-minute because the difference is, on the 5-minute, I'm going for a little bit better reward to risk compared to the scalps on the 2-minute, because we've been hitting the 2-minute hard because it was such a brutal range market that we kind of had to. Now, the better question now would be, which chart do I think I have a little more edge on? I would have to say the 5-minute, because which is why I prefer the 5-minute. But if we need to trade the 2, or if we can use the 2 to beef up the sample size throughout the day, 100% I'll do that. Just because you have a little less edge maybe in your expectation on a chart doesn't mean you shouldn't ever hit it, assuming you do have some edge. Some edge is better than just not trading. More edge at scale is of course better than some edge at scale, but more edge with, 1 trade a week is not better than a little edge with 6 trades a day. Does that make sense? Winning percentage is meaningless. Edge is what matters. Somebody can have a 98% winning percentage and lose money over time because the reward to risk is so inverted. I think people like to flex their winning percentage. Not realizing that it just looks dumb. They don't understand that you're missing half of the equation, if not more. That's right, Benjamin. Trader math, baby. Minute 52 out. All right, about 60 seconds here. Let's see. This looks to me, I gotta tell you, like we are potentially seeing, we are seeing, you can see on the chart, a little less bear overpowering going on, which leads me to believe that we're either entering a little trading range or the bulls are trying to attempt a reversal, which at this point, of course, would I take a bet on? Hell no. But we got to look at, do we enter a trading range? In which case, if you get long on this bear body, like if it closes up here, you might just be sitting long at the top of a trading range. which I'd like to avoid if possible. So, if anything here, we are 10 seconds out, and I am going to get the copy trader engaged and look to see if I can take a small stab to the short side. Use this this curl to manage risk, take it bar by bar, and see, hey, does this turn into a little trading range? That's the idea. And I'll manage bar by bar. ATR here on the 5-minute chart, currently sitting at 19. 4 minutes, 35 seconds left here on this fresh 5-minute. All right, now, Bears, let's take it right back in there. Let's see this trading range play out. Now, again, we do have low a day down here. This is not, of course, a stop hunting trade. We're pretty far away from that. But I gotta tell you, I think the market probably wants to see those stops get hunted at some point here throughout the day. Again, limiting factor in this trade, but just worth throwing out there. All right, now, Bears, take it back. Let's form a new little trading range here. There you go, Bears. ATR, about 20. All right, Bears, suck this a little deeper in and form us a trading range is what I'm looking for here. Again, ATR just under 20. I'd love to see maybe 3/4 of an ATR on this scalp. There you go, Bears. Take it back into that little trading range. This new trading range that's gonna form here. Let's see. ATR 20. There, that's it, Bears. Take it deeper. See if we can get 3/4 of an ATR. All right, a little more here, Bears. Little more here, Bears. Little more. There we go. Limit buy out. Let's see if we can buy that back. No fill. Leave that out for a second. See if we can get a fill. If not, we'll pull it. Stay exposed to the bigger move. See if we can get a fill, man. Damn close. All right, pull that order. No fill. See if the Bears can give us one more run at that. ATR 21. Oh, you Bears. Oh, you Bears. Well, they did exactly what we wanted, but we did not get a fill. Let's see if we're not getting dogged here. The Bears are giving us one more run. HR 19. There we go, Bears. Oh, you dogs. HR still about 20 here? All right, Bears, take it down through so we can get a fill this time, huh? It's part of the game, man, when you're using limits. ATR about 20. Still going to get 3/4 of an ATR. There we go, Bears. Take it through. Punch it. And there we go. We got our 3/4 of an ATR. Got teased. But good trade nonetheless. Let's move on. All right, that is trade number 3 on the day. We are sitting not too bad here today. All right, about 60 seconds out here from the close of this 5-minute bar. Chuck, you took it. Good work, brother. How we doing, guys? I gotta check in with you guys every once in a while, make sure, are we doing all right? And I don't mean P&L. I hope you know it's not what I mean at this point. I mean psychologically. Whether you're green, break even, or red, are you enjoying yourself? Are you following your plan? Are you not moving stop losses? I hope you're not averaging in when it doesn't make sense and based on your plan to do so. Not just in general, but based on what you allow yourself to do at certain times to make the math look right. You're not breaking those rules. Are you staying happy with yourself, right? You start breaking rules, man, you start being disappointed in yourself, and that's when you stop having fun. You set the guardrails for a reason, man. Stay in them. Makes you feel a lot better about yourself. Damn right we're on every day. Subscribe, man. Doing great, good to hear it. Back to discipline, James. Good to hear it. I think as humans, we are happiest when we are disciplined. At least 80% of the time. In all aspects of life. And the other 10 to 20%, you have fun. But in the markets, there's not really room for the other 10 to 20%, man. It's got to be like basically 100% to the best of your ability. There you go, Raul. Good to hear it. Yes, KC, when I stick to my plan, I'm stress-free, win or lose. That's the benefit. That's the benefit. I don't think a lot of people really experience that. They say, how do you... Man, you lost 3 in a row. How are you, like, not pissed? Because I look at my data. Which is my data. It's nobody else's. It's your data. No one else's. You look at it, you say, okay, when I stay within these guardrails that I've set for myself and refined time and time again to make my decision making easy and make myself profitable as consistently as humanly possible. Which you'll always be refining, by the way, until we're done doing this, which ideally for all of us will be many, many, many decades. I do think we're all going to live a little longer than we think, based on the way science is going. But when you stay within those guardrails, you're happy. You want to be happy while you're doing this. It not only makes your life better, because you spend a lot of time at the screen, but it makes you trade better. When you're pissed, you don't trade well, and your life kind of sucks. That's not why we became traders. We became traders to become happier, right? And have more freedoms. Not box ourselves into a psychological and emotional and stressful box that doesn't make any money. That's not the point. The point is to make as much money as humanly possible with as much freedom as humanly possible. That's why you became a trader, is it not? So you want to enjoy yourself while you're doing this and be having as much fun as possible, but staying within those guardrails so you can look in the mirror and say, I'm a disciplined motherfucker. I stayed within the guardrails, I got cut, and I didn't flinch. That's hard, bro. If you can do that, you're going to feel really good about yourself. Which is important. 45 seconds out on this 5-minute bar. Hey, good to have you. Welcome. All right, big old doji closed, tiny little bare body with a lot of wicks. Nothing to do on that bar. Let's check out the 2 and see what's up over there. Not much. Not much. The 2 is basically just a, as you'd expect, it's a zoomed in version of the 5, which sounds obvious, but it's not always so one-to-one. It's not always kind of the case. Today it is. It's kind of exactly what you'd expect. Hey, good to have you, brother. All right, guys, hey, quick break. I'll be back in a couple of minutes. Don't go anywhere. All right, welcome back. 3 minutes, 53 seconds out from the close of this 5-minute bar. Let's take a peek over at the 2. Yeah, quite a few wicks over here on the 2. 5 is a little bit cleaner, so let's stick over there for now. And keep looking here, see if we can get trade number 4 on the day. Man, if you guys haven't yet, please hit like or dislike on the stream. Helps out tremendously, really it does. And I appreciate you doing so. 3 minutes out. We are clearly in a soft bear channel at this point. You guys see this more aggressive one has now kind of turned into this. So let's keep an eye on that. Still use time and sales? Yes, of course, on stocks. On stocks. Not so much on futures. All right, less than 2 minutes left here on this bar. Kind of right in the middle of what looks like a channel right now. What we have drawn there. Let's see if that kind of stays put. All right, 43 seconds left here. This makes me start to think, I mean, if we got rid of these, just imagine those are not there currently. Don't you guys think we could also draw it this way? In a lot of ways. I mean, right? You could have that drawn instead of the descending channel and not be, like, incorrect. You can be seeing things in a way that I think a lot of people would see things. So we have to consider that as well. Starts to make our job a little tougher. But, just so we don't have to deal with that eyesore, let's get rid of that. We'll go with that for now and see if that holds, and we'll adjust as needed. All right, guys. Well, listen, I'll tell you what. The best deal right now is Take Profit Trader. Code BIG, B-I-G, baby. 40% off, no activation fee. I'm out of here for the day. Subscribe to the channel if you have not done so already, and we will be scalping live again tomorrow morning, as we are doing every single day. All right? All right, guys. If you have any questions, go hit one of my comment sections. I'll read them and take a look. And maybe we'll touch on it on stream tomorrow. All right. I'm off to lunch. Hey, in the afternoon, I imagine many of you are trading the afternoon. I'll see what the afternoon brings. Stay patient. Let the setup come to you. And when it does, if it does, fucking hit it hard, man. Have a good afternoon. See you tomorrow.